Good morning, everyone. Welcome to the opening playbook for Thursday, September 25th, 2025. Hope everyone is doing well. Good morning, James, Brad, MKK. We're going to get going with a little bit of pre show information, especially helpful for those that are fairly new to the program. And then we will get going with the show. For those that are here for the first time, a special welcome to you, your first opening playbook. This is a free daily webinar that we do Monday through Friday. We try to provide some timely market overview. We focus on education, answering questions, occasionally do some live trading and have some special guests. And of course, the stars of the show are Graham Linman and Nathan Tucci. A little bit about the interface that we have here. That green bar on the left is pretty much just for decoration. You can shrink it to make the presentation area a little bigger by clicking on that hamburger button in the top left. That's the 3 bars stacked on top of each other. In the bottom left corner is a speaker icon. That's your mute and unmute button. So if you lose sound at any point, double check and make sure you didn't accidentally click or tap on that. In the bottom right corner of the presentation are 2 buttons that control the size of the presentation. The double arrow button will make it full screen. That will give you the best view of the details being shared on the screen, but will cover the announcements and the chat. The button to the left of that is a picture in a picture button. That will shrink the presentation down into a little floating window, which will allow you to do other things in the background, but it is browser and device dependent, which means depending upon which browser and device you're using, you may or may not have that button available to you. Recommend trying the Chrome browser. People seem to have the best luck using that. The the chat is a group chat. If you want to direct message any of the hosts, meaning me, Nathan, or Graham, you can click on any of our messages in the group chat, and then you can click on that double speech bubble icon to direct message us, and only the person you're messaging will see that conversation. If you'd like to see any of the previous opening or closing playbooks, you can go to our replay page. That's the URL on the screen there and a preview of what it looks like. Down below the presentation area, we have a number of helpful links. The first link there is the one that takes you to opening and closing playbook. That's the link you should have bookmarked. The second link is the one we just previewed with the recent replays. The third link, the YouTube one, is older replays. The NMC Daily Scan email is something that you can sign up for free and gets you daily information from the gang here. The next 2 links are and actually I have Lance's link in there now too, but not in the screenshot. We have the Telegram channels for Nathan, Graham, and Lance to sign up for. Those are free as well, and that is the best way to stay in touch with the traders that are part of our daily New Money Crew programs. They're sending stuff out throughout the day, letting you know what's going on with their programs, with the market, and with events that are happening. If you haven't signed up for the $1 VIP Playbook membership, you should definitely do that. It'll be the best dollar you ever spend. We've got a special portion of our members area that's just $1 for lifetime access and gives you a whole bunch of useful stuff, including education on the way that we typically trade here in opening and closing playbook, online calculators for doing things like credit spread calculations and things like that, helpful links, all kinds of cool stuff in there. And the last 4 links are for some of the audience will find advantageous. Some of you may or may not need it. The How to Paper Trade is for people who want to be able to practice trading without using real money. The Guide to Level 2 Options is really a guide to all the different levels of options, and it tells you about the different types of options trades and how to get permission in your trading account to do those types of trades. One-click trading walkthrough is a video walkthrough of our members area, And the CS Live Sizzle Reel is an introduction to our customer service live team, which is really an incredible add-on service that we give with all of our memberships. We provide education and customer service in a live Zoom room 3 hours a day, 5 days a week. If you're not taking advantage of that and you are a member of something of ours, then you should definitely check that out. Today we have kind of a special opening playbook. Nathan is going to be walking us through his latest experiment that he's running, in case you'd like to try running through it with him as well, called the overnight arbitrage. He'll explain all of that in just a few minutes. He's also got some free goodies for you to take with you, and he's opening up a few spots in his Tucci headquarters program to allow a few more members to join. That is his all access to all things Nathan, as well as some special headquarters only features and tools. So stay tuned for an opportunity to get into that. And now let's go to the theme song.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Hello. Welcome to everybody who just joined us. We are in the opening playbook for Thursday, September 25th. Hope everybody's having a good morning. I hear it's raining in a lot of the country, so maybe it's a little yucky outside, but hopefully that won't affect your attitude and success in the market today. Although I'm not sure the market's going in the direction everybody expected it to, but I guess that's why we have Nathan to tell us what to do.
Yeah, definitely getting a little flush today. This is probably the first time we've seen like real bearish momentum since the end of July there. I mean, we had a little bit like August 18th, 19th, where you got a couple days stacking up. But we're seeing a little momentum to the downside. So I think we're probably still kind of in the buy the dip environment until we actually can kind of build on this. I mean, if you look at a weekly chart, even I was talking about this Tuesday or whatever, of just like, hey, taking a step back, don't get too zoomed in. And so I guess good timing on that discussion. So yeah, fairly ugly, 0.75% negative right now. But I think, we'll see if we get kind of a shakeout and a fill the gap today, if we actually can build on some negative momentum. Graham, you might get the pullback finally here.
Dude, I was just thinking it's almost hysterical at this point. Same exact thing happened in February. Probably 4 to 6 weeks in a row. I said, I think we're not freaking out here, but let's just be careful because I think we're going to get a pullback. And eventually I said, I give up. It's going to happen at some point, but I'm tired of just saying it every week. And then that week it sold off. And then this week, same thing. I said, it's going to happen at some point. I'm tired of calling this over and over again. We're just going to keep trading. And then when it happens, we'll size up. And sure enough, that day, Tuesday, was the first red day.
Yeah. Yeah. Now, to be fair, folks, keep in mind, it's looking, like I said, got a little bearish momentum. We'll see here. We are less than 2% from the highs right now. So we are not really in a decent pullback yet. We'll have to stack up a couple more days here before we get into that like 4 or 5% healthier range. Because what 5% on the SPY 667 would be about 35 points lower. So we'd be in the 630s by the time we got to a 5% pullback. So we've got quite a ways to go before it becomes like a real healthy correction. But Graham, I'm not sure we'll get more than just a 2 or 3% flush, even if we do get some more negative momentum here.
Yeah. We'll see. I would love it. So we can get some bigger size trades going. With that said, did anyone get filled on Oklo yesterday? I think none of our bounce back trades really worked there, obviously, because the market didn't bounce back.
Oh, wow.
I'm curious if anyone got down Oklo, because if you got Oklo, you're up 300, 400% today. I did not get filled.
Oh, wow. No, I am. I'm just looking at mine. Yeah, not a lot rolling in the right direction, I have to say. Gold was up a little bit for me, and then sold right back off, kind of down into the neutral range. I will say there's one. I see one positive number in some of my trades here that gives me some hope. That's IBM, still working on filling that gap that we traded up over 3.5% or about 3.5% today. And interestingly, Tesla down. I'm used to all these days where everyone freaks out, it's negative, and then Tesla somehow is up 2% on the day. But we've got Tesla actually down, following the herd. So we'll see. We do have our overnight trade on. It's obviously down when the market gap's down. But the thing about overnight options is pretty cool. I'm not saying we're going to win today. I mean, we might lose usually when the market gap's down 0.8% or whatever. Usually we will lose. But the cool thing about overnight options is that we've got plenty of opportunities still to win this trade. That line in the sand, if it comes up and fills the gap, the overnight gap, we're actually going to be in fine position. We've seen that happen a lot of times. That's why the win rate is so high, because even on some of the negative days, we actually sneak out a win. So not going to say we're going to win, but it's actually not a huge move to get us back into a winning position on that trade either. And it's one of the reasons I love that strategy. So,
yeah, one thing I am looking at here, Nate, if we do get this continued pullback, is Bitcoin. And I like Bitcoin on a weekly chart. That's how we've traded it in the Perfect Bitcoin Trade program, which I don't even know. Let me just give you guys some stats on how good that's been. I'm not trying to sell you on it or anything. I'm just trying to show you why weekly charts can be so important. So we use a weekly chart in Perfect Bitcoin, and we're at 77% win rate with the average trade, Nate. Average trade, winners and losers, 40% in 11 days. So we're averaging 40% a trade. Like that means our winners are like 70, 80, 100, 150. And then our losers, 80, 90, 100. I'll just show you down here.
yes.
I mean, you can see here just profit alone. And again, I'm not doing this to sell you guys or anything. Like $5,000 in each, you're at 88 grand in a little over a year. The reason I'm showing you this is because it specifically looks at Bitcoin on a weekly chart. And I just want to show you Bitcoin here. Technically speaking, just look at this. This green line here is a 50-day EMA. So in this case, it's the 50-week, or not EMA, SMA, simple moving average. Look how Bitcoin, it'll come down and touch it and then run. Come down, touch it and run. Come down, touch it and run. Right now, we know historically September is weak for Bitcoin. We haven't seen that big flush yet. But if we do, I mean, keep in mind, this will keep trending higher. So this will keep pulling up this direction. When we do get a touch, Nate, I think that's going to kind of give us our signal. Like, even if it's very, very close, like you see here, and even if we have to wait a few weeks, I'm going to put on some options looking 2, 3, 4 months out, going for 200, 300, 400% returns on Bitcoin. So I'm just being a little bit patient right now. I know that historically October, November, December are very, very bullish, but I would like for it to come down here and meet at this 50-day line, which right now at the current trajectory would be about 106, 107 on Bitcoin. If we get that, it'll be very similar to what we saw here and very similar to what we saw here. Hopefully a good buying opportunity before that next, and what I think could be the final run up here in this cycle.
Yeah, I mean, as far as like Q4 October 1 trades go, Bitcoin's definitely top of my list. I'll probably put some size onto Bitcoin just because I think the risk reward is too good not to. If Bitcoin, let's say just goes down to 110 and then it makes all-time highs in Q4, which I would expect it to, the risk reward you can get on that is going to be very significant, probably 400, 500.
If we were to enter today, let me just give you a number. We'd probably use 68, roughly speaking. Let me just see what they're priced at. So I go 70 here. The trade I would put on, Nate, for a very, very reasonable move, not even my target. This is just back to near all-time highs in 3 months. This is going to be crazy, guys. The trade I would put on would pay 1,370%.
Yeah.
For a very, very normal move in Bitcoin over 3 months. Tons of time, very normal move, 1,300% payout.
Yeah. Yep.
I can just give this to you guys. I'll just give it to you guys now for fun. If you want to take it early and just forget about it, I'm going to try and time it up a little bit better. But honestly, this is pretty much the exact trade I would be taking.
Yeah, I mean, for me, I am thinking that, come October 1, assuming it's in a place, whether it's right at that moving average or sitting on 110 or wherever, that's one that I might put like 10 grand on and go for a 10 to 1 and try to make 100 grand on one trade. So we'll talk about it. Make sure you guys don't miss opening and closing playbook next Wednesday. That'll be the kickoff of Q4. We're also going to do a special roundtable on the 30th to project some of those big moves. So actually the 30th and the 1st are kind of two must-haves to be here on opening and closing playbook. September 30th, October 1st. Those are ones that I would definitely recommend you don't miss. All right. Well, let's go ahead.
I'm just posting it here in the chat. Again, I'm going to take this one with a bigger position here later. I'm just going to throw this one on now. But let me just show you one more time before you do that, because I think this is actually absolutely crazy. Like, this is mind-blowing. We're giving it till December for the most bullish time in Bitcoin's history, at the perfect timing in the cycle, to get where my crosshairs are here. I just got filled. I cannot believe this, Nate. I actually can't believe this. 1,300%.
Yeah, maybe I'll put some on now too, and then just stack along as we go. It's just, the risk reward does seem too good to ignore there. Well, I'm excited about today. Today's going to be a little bit different. I'll explain why here in a second. But what I'd really like is some feedback after this session, after we kind of go through the training, because I told Graham, I'm going to be perfectly honest. I have no idea if you guys will like this. Kind of what we're going to do is we're going to cover a strategy that I'm still working on, that is experimental, and just walk you through kind of the behind the scenes. And so it might be a little bit.
Nate, scratch everything I just said. Sorry.
Okay.
I just bought EQT. Someone noticed.
Oh, well, there you go.
All right. Well, that probably makes a lot more sense. Yeah, the ROI here is closer to 300%.
Okay. So,
sorry, guys.
Like I thought, though, then that means if we actually come back down to the moving average and do the new highs, there'll be less time and a bigger move. We should be at 500% plus.
Yeah, and I apologize for that. I don't know why. My Thinkorswim's normally linked to my chart, but it was not here. So
that's what happened to me too, by the way.
What
happened to me too, by the way, where I'm on the chart and then I think I'm on the trading panel and I'm not. But anyway, Yeah, I'd love you guys' feedback as we go through this. Let me know if this is interesting to you, because there's other things I'm working on that we can kind of do a similar idea. But before we jump in, let me cover we're trying to get in the habit of doing this at the beginning of the session, just to be straightforward. Tools and strategies to the best of our ability. Always a risk of trading. Past performance not indicative. Obviously, we'll show you great examples, how the strategy works, winning examples. We'll try to show you some losing examples. But everyone here hopefully already knows winning and losing is part of the game, all that kind of stuff. You can go to our terms and read through that, just to be super duper extra wonderfully clear. In trading, there will be losers, especially if you're an opening and closing playbook and we're throwing out, high risk, high reward trades, all that kind of stuff. We expect to lose a certain percentage of the time. And so that is part of life and part of trading. Just be very open and clear about that. All right. So today we're going to do something a little bit different in opening playbook. It is not something that I typically do. Instead of walking you through one of my proven strategies, like, wrap orders or jump trades or something like that, I'm actually going to walk you through a totally experimental idea here in opening playbook. And so I'm going to show you what I'm thinking. I'm going to show you the concept behind it and how I'm attempting to trade it. But bear in mind, this is pretty early in the process. So I'm just kind of thinking through how we're trading it. Now, if you want to go test it on your own or make some modifications to the idea, if you like the idea and you want to start working on it, I'm going to give you everything you need to do that. Again, just keep in mind, this really is an experimental strategy. Put more plainly than that, I don't know if this will work, right? That's the stage of the strategy that I'm in right now, is that we don't know if this will work. We don't have testing. I'm not going to show you a whole bunch of curve fitted back tests or anything like that. I'm just going to walk you through the concept of the idea. I do think it's an interesting concept, and we might all learn something as we explore this together. So you might take the idea and track it and tell me, hey, Nate, I figured out that X, Y, or Z happens. Or we might have some winning trades together, or who knows what else. So I just think it's a worthwhile. But like I said, I'd love your feedback. You can tell me by the end of the session of, hey, Nate, this was confusing and too much, or I loved it and I'd like to learn more experimental ideas, or anything in between. I'm very open to your feedback, because this will be a bit different. So first, let's walk through the concept, and then I'll actually walk you through the execution of this strategy idea. So the concept is that we're going to find outliers and then trade them to conform to the pack. So we're going to look for an outlier move, and then we're going to trade it to conform to the pack. The Bible says, do not conform to the world, but we're looking for stocks that are going to conform to the world, okay? So that's what we're looking for today. So here's an example. Let's imagine a day finishes like this, okay? These are, some assets you might track. The Qs are up 1.1, IWM's up 1.25, gold's down a bit, SPY's up, VIX is up, TLT is negative. Which one of these do you think would be the quote-unquote arbitrage trade? Let me know in the chat. Which one of these, just based on how this market finished in a theoretical example, would you say is out of line? Give me your guess in the chat, or maybe you already know where I'm going with this, and it's more than a guess. Let me know what you think would be the one that is out of line here, and I'll give you guys a second because our chat's a little bit delayed. So I'm just wait here 10 seconds. You could pop it in the chat. All right, we got some guesses coming through. Wow, you got Graham. I didn't think anyone would get this right, to be honest.
They know. They are smart.
Okay, yeah. You guys, the majority of you are right. It is the VIX. Okay, so gold is not out of line because gold does not have a direct correlation. It can either correlate or not correlate. TLT is same, but more often inversely related. So we kind of scrap those two. Don't really worry about those. Those are what they call red herrings. It's the VIX that's out of line. Usually if the Q's up and the IWM is up and the SPY is all up nicely, the VIX should actually be negative. But in this case, it's positive. So this is lining up, being up nearly 5% while the major markets are up, and only risk-off assets are negative. So this is what we would say, hey, this is out of sync. This is an outlier. It actually doesn't line up with the rest of the market. So our trade would be short the VIX, expecting it to come down after being out of place. The VIX is out of place. We would expect it to come back down into place. All right, what about this one? What do you guys think on this one? Let me know in the chat. These are all green. Which one is out of line here in this case? Yep. Yeah. So it's the IWM, right? Because everything else is neutral or close to neutral, but the IWM is up 1.77%, right? So we would consider that out of line. So we would short it because we would think, hey, this is probably going to fade back to more of a net neutral environment over the next day because it's up 1.77% while everything else is pretty neutral.
Just kind of got ahead of itself.
Yeah, just kind of got ahead of itself, and we think more than likely it'll come back down. All right, one more. What trade are we going to make now? Okay, so this one, a little bit more of a mixed batch. In this case, Qs, they're way too negative, right? They're, SPY's positive, IWM's neutral, VIX is negative, and then Qs have this big outsized negative day. Maybe, Microsoft missed earnings. Who knows? But we've got a negative day here. So you might be thinking now, okay, Nate, who says it has to come back in line? What if the Qs are just getting a head start and everything else is actually going to follow them the next day versus the other way around? And my answer would be that might very well be the case. For all we know, that might be more the discoveries. Actually, that outlier is a better indication for the rest of the pack than vice versa. But it might even be worse than that. Maybe it means nothing at all, right? Maybe the next day is just random as any other day, and there's no insight here on this arbitrage idea. But since these broader assets are either directly or inversely related, I do have a suspicion that they will fall in line more often than not. So right here, you've got the IWM, you've got the Qs, and you've got the SPY. And they're pretty darn correlated. I mean, when you get these big outsized moves, more often than not, they're going to come back in line when the rest of the assets don't continue the momentum. And you'll see that they follow each other. But when one seems to get a little out of character, it normally comes back in line. And we see that in the long term and the medium term. And so I think we'll also see it to some degree in the very short term. And so that's kind of my suspicion with this idea is that over time, even on the short term, we'll see some that fade back. So first, let me just ask you, does this make sense? Do you guys at least kind of get the idea here of what we're doing? We're looking for things that are out of line, like Graham said, that it gets ahead of itself or it gets ahead behind itself, or it just kind of has a moment where it gets bid, maybe institutions or whatever, or the VIX price something in that isn't real, whatever it might be, something is out of line. It doesn't make sense for the rest of the market conditions. And so what we're thinking is this will probably fade back in line or pop back in line just to kind of make sense with the rest of the market. So that's the concept. One note is that we're actually, as we go through this, I'm going to walk you kind of through how we would build this. We're not using the same exact assets I gave you in my examples before. So we're going to use a different set of assets. The reason that I didn't give them to you in those examples is because I didn't want to confuse you and have everyone be like, wait, what even is that? What are we talking about? I just wanted to give you a more straightforward example. So you can now erase some of those assets from your mind, and I'll give you the exact assets that we'll be using. So the first thing we're going to do here is we're going to set up our charts and the data. Because remember, we are looking for things that are going to either correlate or not correlate. So the first thing that we need is to actually put those assets on the board and get the data. So we're going to be tracking 7 different assets and their values. Now, what we're going to mostly be tracking, mostly be tracking is the percentage change. We don't really care about the numbers. We care about the percentage change. So what you can do for this is you can set up a template in TradingView. I don't know if anyone here uses TradingView, but that's my favorite because I think the charts are really nice. And you can set up a template and save it and then just open it up and switch back and forth between that template and other things you have going on. Or you could do the same thing with a grid in Thinkorswim. So you could have like a grid full of charts that you save that, call it the arbitrage grid, or a watch list in Thinkorswim, which is really easy to do. Or maybe you don't use Thinkorswim or TradingView, and your platform has its own set of, charting or watch lists or whatever, however else you want to do it. But I'll show you in TradingView and Thinkorswim today just to give you a framework for how to do this. So let me give you the tickers, and then I'll walk through those 2 different ways on how to do it. So here they are: QQQ, IWM, SPY, VIX. You'll notice those are the 4 that were in my examples. And then differently, we have VOLD, TRIN, and ADD, which, by the way, in TradingView, that's going to be ADVN, not ADD. So these are the 7 assets that we're going to be tracking. And let me just pop these in the chat for you, and then I'll walk you through how we're actually going to look at those. And I'll do two different examples. I'll do an example in TradingView, and then I will do an example in Thinkorswim. All right, so let me pull over TradingView first and share my screen there.
While you're doing that, Nate, do you want to just kind of define arbitrage for people who don't really know what it means?
I mean, just what I was saying, kind of something that's out of line that doesn't match up with the rest of what we're seeing. And I'll give you a kind of a scorecard for exactly how to do that as we get going here. When we say arbitrage, I don't actually mean it in the technical sense of the word, like Bitcoin is trading for 110,000 in one exchange and it's 110,400 in another exchange, and therefore there's a net for. I don't mean a true pricing arbitrage. I mean an asset arbitrage. One doesn't make sense with the rest. Okay, so here is TradingView, and the way that I would like to do this, I mean, just so I can see it visually, is I would go up in TradingView and I would use this grid so that I could kind of get all 7 assets lined up. So you do this, and this basically just says, okay, here's 7 charts for you, right? And again, you're probably not going to be able to make sense of this on a daily basis necessarily if you're looking at 7 charts. But it is kind of nice just to have the visual. And then what you would do is you'd go into each chart and you would set up the tickers that you want. So here we would set up QQQ. That's our number 1 asset. Here we would set up IWM. That's 2. Here we would set up SPY. That's our 3rd asset. On our 4th chart, we would set up VIX right there. On our 5th chart here, we would set up the VOLD. Make sure that you're using the actual NYSE VOLD. Should be like a number like this, 220 million, 500 million, something like that. Then we've got TRIN. By the way, there is a stock called TRIN, and if you just type in TRIN and click enter, it will give you the stock. You don't want the stock. You want the NYSE index. So type in TRIN if you're on TradingView. Make sure you hit this second one. This is like a number between 0 and a handful. So something like 0.9 is right. And the last one, if you're on TradingView, it's not going to be ADD. It's going to be ADVN. Okay. Again, it's going to be this NYSE index. Click that. You'll see a number something like this. In this case, 753. All right. So that's how I would do it in TradingView. I would set up these 7 charts. Then what you could do is you could just tick 1 day for each of these. So that's one of the nice things that TradingView does. It'll let you just kind of go to 1 day. 1 day. Well, I guess Trin won't let you do it, but you could zoom it out. There you go. I don't know why Trin and Advanced won't give you the 1 day. I guess because they don't break it up into smaller candles. But slide that over and zoom it in, and there you go. So now you'd have your 7 charts open. You can see here, what's moving in either direction. Notice, by the way, the Qs are actually up on the day from the openogram, which is kind of wild so far. Maybe not plus because of those overnight moves. # overnight options. But you can see IWMQ SPY actually net up since the opening price. This rally has been pretty significant. But anyway, VIX now trailing back down as you would expect with all those. So those would be your 7 charts. Now, the other way that you could do this is you could do this there's multiple other ways you could do it. But the other way that would be really easy if you trade like Graham and I use Thinkorswim is to set up your Thinkorswim watch list, because that will give you the values in a really easy way. All right, let me share that screen. I tried to blow this up so it's nice and big here. So you would do this. What you could do is you could go to create watch list, name the watch list something like arbitrage, right? And then you would just pop in those same symbols, right? In this case, you would use the regular ones that I mentioned, not the ADVN, but just ADD, IWM, SPY, VIX. Then make sure you use the $ here for, someone's calling me on Slack. Make sure you use the $ here for Vold. Make sure you use the $sign here for Trin. And then make sure you use the $sign here for ADD. All right. And then here, you've got your assets in this new watch list for you that are really nice and easy to see, right? So you can see percent change, which we're going to use on some of them. You can see value, which we're going to use on some of them. Net change. It's a nice, easy way to see those on a watch list if you want to do it that way. All right. So those are two easy ways that you could do this. But like I said, whatever your charting platform is, I'm sure that you can set up all of the tickers and the data that you need. Now, let me get back to the presentation here so we can continue from here. All right. So we got our 7 tickers. Once you have your charts and data set up, then what you need to do is you need to build a scorecard of this data. All right. Because you want to actually track the data and see where the opportunity are. Now, the scorecard is going to tell you how to rank everything so that you can actually find out if something is out of line, right? Because you have to not just have the charts, but see if everything is in line or out of line. So here are the scores that I am currently messing around with and testing to create this scorecard idea. So you have the ADD and you have a bullish, neutral, bearish, metric for those. Vold, same thing. Trend, same thing. SPY, same thing. Here you can notice if the SPY is between negative 0.25 and 0.25, same with the Q, same with the IWM, we're just giving that a neutral score because we don't want to trade things that don't have any net movement. Like if something is 0.1% different, that's not really an opportunity for a big move. We actually want to qualify it that it's making a directional move. And so we kind of have that neutral range versus bullish and bear. So I'll give you guys this scorecard in a minute. But here is the metrics that I'm using right now. And then, of course, what you need to do is you need to summarize the scorecard so that you can find the outlier that you actually want to trade. So let's walk through the logic of that. Now, don't worry if this gets a little messy and chaotic. As we walk through the logic here, you're probably going to have some questions like, wait, how do I track that? Wait, how am I matching that up? Don't worry. I'm going to try to simplify this for you at the end. For now, just try to follow along as best you can and hopefully soak up some of the logic of this idea. And then we can simplify it at the end. So step 1 is you're going to give every asset a color or a score, right? So you're going to say like, okay, if it's green, that means that asset is ranking as bullish. Red means it's ranking as bearish. Yellow means it's ranking as neutral, right? So it's either bullish, bearish, or neutral, and each one is going to have an obvious score. Step 2 then is you're going to define a consensus, right? What is the overall doing? Now to do that, you're going to count greens and reds, right? Bullish versus bearish. And you can ignore the yellow because that's just kind of nothing. And then you have a consensus if at least 4 indicators are either green or red. So you basically have enough non-neutral evidence there. One side has at least a 2-score advantage, right? And this is where that kind of arbitrage technique or idea comes into play. Because if you just have 2 red and 2 green, well, that doesn't really mean anything. But if you have 3 green versus 1 red, or 4 green versus 2, or 5 versus 2, now you have a consensus. You have an idea that something might be out of line. And if no 2-score advantage exists, if it's just like 2 versus 2 or 3 versus 2, well, then it's net neutral, right? There's no actual consensus that something is out of line. And so you'd have no trade. So then step number 3 is going to be, okay, how do I find this outlier? And here's an important note. You want to focus on the tradable instruments, right? The outlier needs to be something tradable. So it has to be the SPY, the Qs, the IWM, or the VIX. That's going to be your tradable outlier. So if consensus is clearly green, but one of the 4 is red, then that instrument is going to be an outlier. So for example, let's say 5 out of 7 are green, but the Qs and the Trin are red. Well, that means the Qs are now your tradable outlier, right? Because everything seems to be green. There's only 2 that are red, and one of them is your tradable outlier. Hi, Alice. We are live. How are you? Hope you're doing well. Hi, Rome. So 5 out of 7 are green, but QQQ and Trin are red. Now you know, okay, Qs are falling behind, everything else is green, they have a likely chance of rolling back to live. So then the last step here is what I call the peer check. Because remember, we're focused on the tradable assets. So if we're trading Qs, IWM, or SPY, we need to do an additional check against the other two. Because if either of them match the outlier, it's actually not a true outlier, right? So if you have 1 yellow, 4 green, and 2 red, but the 2 reds are QQQ and SPY, well, then it's not actually a true outlier because the Qs and the SPY are moving together. And so you don't have as much of a confirmation that Q should snap back. So that's kind of a fourth filter there. So is anyone at this point a little overwhelmed by tracking this red, yellow, green logic? Probably people are thinking, okay, Nate, sure, theoretically, I kind of get it, but what the heck? How am I tracking?
Yeah, I think the concept, chat's pretty pumped about it. The concept itself is super awesome. Now, how to track it day to day manually sounds almost like a full-time job.
Yeah. So I have 2 things here to mention on this, because I agree. Even as I was going through this training, I was thinking, geez, people are going to hate me by the end of this training because I'm throwing so many things at them just as a conceptual idea. So 2 things to mention. One, I did build you a little helper that I'll share in a minute to try to make this easier on you. I think it's kind of cool, and you can take it today. And I think it'll help you a little bit. 2, I am going to tease you a little bit with the ultimate arbitrage tool that I'm working on when we go through the HQ presentation. So after this, the next thing that I'm going to do after we do this training is Graham and I are going to talk about Tucci Trading HQ, which is kind of my all access idea, everything, that's included in there. And so I am working right now actively on the ultimate tool that will literally rank everything automatically, find the outliers, score the outliers, define the move, define the trade, do everything like that. So I have a little bit of a tease for you on that coming into HQ here in a minute. So first, let me just show you the little immediate tool that I made to kind of help you keep score for now. So let me switch over. This is something that you guys can use immediately, and it's kind of fun just to, if you want to start messing around with this and using it, you can do that starting today. So this little scorecard I made for you guys, you can see here, it's really complex. It has dates and it has tickers. That's what it's got in there for you. And this idea is basically to show you, hey, here is the scorecard elements. We've got the ag, vol, trend, all of that, and what means bullish or bearish. And then here at the end of the day, because we would do this at like 3 p.m. toward the end of the day, you would put in your scores. And I'm going to add some notes here so you guys know, but the Qs, what you're putting in is a percentage number. So let's say right now the Qs are down -0.5. Well, you can see that's automatically going to turn that cell red because -0.5 is a bearish reading. At the same time, let's say that the Qs were up or IWM was up 1.2. Well, you can see here, that's going to turn that cell green because 1.2 on IWM would be positive. On the SPY, let's say it was up 0.1%, so pretty neutral. Well, you can see that's going to turn the cell yellow because for the SPY, 0.1 is a neutral score. For the VIX, let's say the VIX is up 5% on the day. Well, that's going to be bearish because if the VIX pops 5%, that's a bearish signal, so it automatically turns the cell red. Then let's go to the VOLD. So this is a little bit, again, I'll add some notes here for you guys. But for the VOLD, we know that it's a much bigger number. The way we do this is we simply put the number in the millions. Okay, so we're not going to type out 400 million. We're just going to type out 4.6. That means 4.6 million. The dashboard knows, okay, 4.6 million. That's positive for the VOLD, so it turns it green. Trend, okay, if it's 1, that's neutral. Why? Because it has to be either greater than 1.2 to be bearish or less than 0.8 to be bullish. And then lastly, we've got our ad. Same thing here. Just type in the whole number. Let's say that it's 1,250. Well, it knows that that's over 1,000, so it's green. Okay, so this scorecard is going to do all of that for you just so you can see those reds and yellows a little easier. I'm going to be perfectly honest with you guys. You still got to do some work. It doesn't make it, it's not the automated dashboard that we'll get to, but it at least makes it a little more visual for you. So for example, let's go to the next day. Let's say the Qs are up 1, IWM's up 1.2, SPY is up 0.1. VIX is down -5. The Vold's at 4.5. Trin is at 0.6. And the ad is up to 1,400. Now, if this was the data, I think you kind of see that SPY is the arbitrage outlier opportunity a little bit more easily. Again, it's not perfect. It's not going to be the tool that builds it all out for you and gives you an exact trade. But I think, this red-green becomes a little more straightforward when you can see it like that. So this is my little helper for you guys that I built. Now, before I give you this helper, let me actually add those notes that I mentioned. Put Vold in as millions, aka 400 million equals 4. And we'll just throw that note in there for you. And then ignore percent symbols. Just use percent change for SPY, QQQ, IWM. All right, so there's a couple notes for you guys to use this. Now, what I'm going to do is I'm going to share this doc for everyone. And if you want to use this helper, just open this guy up. And then up in the top left, you can go to File and make a copy. And what that will do is that will make a copy for you. You can call it Arbitrage Tracker. You can call it Nate's Gone Crazy. You can call it whatever you want. And then it'll copy this entire sheet over for you. And you can, use it where these values will automatically come into play. Now, obviously, you want to delete the September 25th and September 26th values because they're fake. And I just threw them in there. And you would start today by putting in, the actual values right around 3 p.m. And if you want to start tracking your own little arbitrage scores, here is your little helper that I built for you. Now, like I said, I'll give you a little bit of a tease on the full helper that we're building, which is obviously a whole different animal, once we get a little bit further here and eventually talk about HQ and everything that's in there. Go ahead, Graham. Are you going to jump in?
I said, no, the technology is booming. You guys are going to love it.
Yeah. So we're excited about that. But anyway, that's a little bit of a helper for you that you can get started right now. Okay. So once you have the outlier, the final step, of course, is to actually trade the outlier, right? As if we don't have enough steps yet, we actually have to talk about the trade. So here's some guidelines. Trade the outlier in the direction of the herd. Use the shortest expiration available. Target about half the outlier gap, and don't hold more than 24 hours because we're doing this on a daily basis. So we're expecting it, to come back on the daily side of the equation. So we don't want to hold it for more than a day. Okay. So here's an example. If this was our scorecard, well, we're mostly red. We've got some neutrals in here. Then we would say QQQ is the outlier, right? Qs are up 0.65%. Everything else is either neutral or negative. We would score the gap. How much could it move against the other ETFs? So IWM and SPY. In this case, as you can see, let me actually go back here. If you average these out, we're at about a 0.15 negative percent move. Okay. So we're at a negative percent move here, which makes the Qs about 0.8% out of line, right? Someone mentioned the Vold. I said millions. I really mean 100 million. Yes, that's correct, Dick. I mean 100 million, not actually divided by 1 million. So it's basically 10 would be a billion to answer that question, which makes the Qs about 0.8% out of line relative to them, right? So, if you do 0.65, add a negative 0.15, they're about 0.8% apart for that day. So what we would do is we would trade them for half of that. We would trade them for a 0.4% move difference. Okay. Whoa, I just got ahead of myself there. If they are, if we're looking at Qs that's trading at 588, we would trade the 589, 590 calls, because that would be about a 0.4% move difference on the QQ, trading it back to the herd. So the cool thing about this, Graham, is that if it works at all, these should be like 150, 180% trades potentially, because you're trading out of the money with some direction. Now, granted, we don't know how well this is going to work, but that's why we're building that full dashboard and trying to optimize it, because I think the idea is cool.
It's a great idea, and it makes sense. Sometimes things just get a little bit out of line. They get a little bit ahead of themselves, or a little bit, in some cases, a little oversold, where it just doesn't make a lot of sense. So it's not always going to work, but in theory, Nate, it should work out 70, 80% of the time, I would think, as far as moving in that direction. Now you're going to have to dial in the options for best risk to reward there. But
I have a question.
And just to give you an idea, like this is like what the dashboard would look like. Well, this is what the dashboard looks like that we're still, blending in, but it would say, okay, here's everything, the score, the value. We've got 1 bullish, we've got 6 bearish. We don't have a highly ranked opportunity right now. Why? Well, because the trend is the thing that's bullish, so we can't actually trade that. So no opportunity right now. But if there was an opportunity, you click it, it would open up a trade idea and all of that kind of baked into the dashboard. So this is kind of phase 1 of what we're actually building on the automated
Super
side
cool.
there, which I think is going to be, it's like a reversion to the mean, Ron, except for instead of a stock that doesn't actually have to revert to the mean. I mean, nothing has to revert to the mean, but I think an individual stock where you say like, oh, that's going to revert to the mean. Not really. There's momentum. There's all kinds of things. Here, it's like you actually have the rest of the market pulling against you, and the thing that's off track reverts to the mean. To me, that makes more sense. But like I said, we're going to have to test it and know. So if you guys want to test this, use that scorecard. Let me know if you find any interesting findings. Would love to hear your feedback. Also, I would love to just know in the chat, do you guys like these kind of experimental ideas? Hey, here's a strategy that I'm working on. We don't have all the data yet. We don't have all the proof yet, but this is kind of what I'm thinking. These are the rules that I'm working on. Here's how I would look at it. I don't know if that's fun to you guys, interesting to you, or if you'd rather like really focus on kind of the more proven strategies. Let me know. I'd love to know that. Sorry, Dave, I railroaded over you there.
That's fine. My question was, is there a time of day to do that analysis where it's early enough to still make a play, but not too early where we don't really know what the levels for the day are?
I would say do it at 3 p.m. Do it where you kind of get the end of day, quote unquote, data, but you can still trade the overnight move.
You can even do it like 3:45 probably, right? The closer to the close, probably.
And that's at least my assumption. We're going up based on a lot of assumptions here. So cool. It seems like a lot of people liked it. At least one person said waste of time for now because it's not really actionable. Fair enough. But a lot of people, I think, like the idea of just kind of like, how do you think about things? How do you experiment, through this and make iterations and kind of see the evolution taking place. So cool. We won't be doing this every day, certainly. But every once in a while, it's kind of fun to pull up an idea and kind of see what we got. Graham's giggling about something over there.
I was just going to say, we would hate to waste your time every day.
Yeah, that would not be cool.
Let's see. Matt, when you were asking about formatting this in a checklist or something, I'm not sure exactly what you're looking for that's different from what Nate did in the spreadsheet. But for anybody who's looking to watch this again, because they didn't soak it all in the first time, which is probably everybody.
And me, even me.
The replays of opening and closing playbook are always at the same place. The link is always underneath the presentation. It's the second link there that says latest OP replays. I'll post a link in the chat just to be super nice, but it's always there for you guys.
Cool. And Graham, now we are going to transition to something that we've never done publicly in the history of our company. I believe. Is that a fair statement?
What
I don't think we've ever shared this presentation publicly.
You had
before we dive into that, one thing. On Friday of last week, opening playbook, we were talking about the contest for the weekend, and one person messaged me and said that they never got their shirt from the last contest they won, and I misplaced that message, and I can't get the DMs back. So whoever that was, if you could direct message me again, let me know. We'll make sure to rectify the situation. This doesn't mean anybody who asked for it gets a shirt. It just means we owed it to somebody who won a contest.
Yeah,
and
you
they
just set
messaged me
yourself
said they
up.
never
You're going to get
received it.
37 DMs with the dresses right now. No, but this is what I was referring to, that today we're tackling this question. And as far as I'm aware, this has never been shared publicly ever until today, this morning. So you
are correct about that. Because we have shared it with our members.
Right. Members only. Yeah. Don't get me wrong.
About a month ago. So it pays to be actually, it was like almost exactly a month ago. So if you're a member, you may have seen this about a month ago, but for everybody open to the public, no, but we do want to show it to you guys because we got a lot of cool things happening, a lot of cool things going on. And it really all starts with the mindset you have when you approach trading. So we want to challenge your mindset, whether you're new to trading, whether you've been trading for 10 years or longer. I believe that this is going to open your eyes a good bit going forward and how you really want to tackle the markets. How do you really want to define which strategies you like best? So today, Nate and I are going to tackle what we consider to be the most important question in all of finance. And we really mean that. It's one that can make or break an account. Now, if you've been following Nate for a while now, then you probably know him as either the guy who used an aggressive approach to publicly grow an account from 10 grand to 50 grand, about a 400% return in only 4 months. Or maybe you've heard of him quietly generating over $100,000 in his slow and steady income portfolio last year alone. Now, if you're in this room, that means you're probably in one of our premium services from which we've been seeing endless stories from the top students each and every week. I mean, we hear from you guys all the time. I love it when we hear it every morning from the overnight options that we know not every trade works out, but more often than not, they're working out. We had Art here, retired Navy vet, said won 5 of 6 trades, made $5,650. Carlos here up $5,000 with minimal risk. Nate's a great coach, humble human being. Richard here took 5 trades, 5 automatic wins, $4,434. Loves that he can set it and forget it. And you guys know there's dozens more. I mean, we can just show them all day long. You guys are great. You guys are awesome. And I love it, Nate, when we bring in a new idea like we did this morning, and you think you're going to, stump them, and they're all on top of it.
Oh, they caught me on that VIX one. You guys are so
smart. You guys are on top of it. You're here every day learning, hopefully earning, but obviously, hopefully having fun. Now, today, Nate is turning up the heat. He's taking things to an all new level, all on a journey to help folks tap into the most effective way to grow an account in all sorts of market conditions. Now, you might find that his solution is surprising, maybe even counterintuitive at first, but when it's all said and done, by the end of this broadcast here, you should have that light bulb moment on the exact steps that you should take to tap into the ultimate way to aim growing your account. So, Nate, why don't you go ahead and walk us through what today's class is all about? Plus the incredible revelations, which you guys just got a little sneak peek, a little teaser.
Some of the revelations. Yeah.
A little something to wet your whistle there, and the developments that you made along the way based on your findings.
Well, thanks for doing this again. And thanks to everyone for being on here. Like I said, we've never done this publicly. And so hopefully this will be a class to remember. My guess is we will only do it one time, as was the case last time. And because for the past few months, we've been working on some incredible stuff, including a new way that I think is kind of the ultimate way to really take advantage of what the stock market is giving us at any exact moment. Thanks to the power